In this video, I'm going to explain what is shorting, how you can short crypto assets like Bitcoin or Ethereum, and where. So there are two ways. First of all, you can go with centralized exchanges like ByBit. This will be the primary example. Or you could go for a decentralized option on the chain, and there the best example is GMX, and I will cover both, but starting with ByBit, which is the easiest to use. So if you have an account, you can just go directly to derivatives. You will have to transfer your USD account to derivatives. They have a separate account. This is also for security. If you get liquidated, because it's super risky, you just get liquidated on your derivatives part, not on the whole portfolio. So you can still hold things on spot, on ByBit, and trade on a separate sub account on ByBit as well. So what is shorting? Shorting basically in stocks means that you borrow a stock from someone and sell it right away and then rebuy that later on when the price drops, because you expect the price to drop. So for example, if you bought an Apple stock at $100, say, and you expect that to fall down to 90, you borrow it, sell it right away, you wait for the price to fall down to 90, you buy the stock, give that back, and you still pocket this $10 difference. This is going directly to you. Again, you can do the same thing with Bitcoin. With Bitcoin, you don't have to borrow that from anyone. Actually, it's not even with the case of stocks. It's you're still not borrowing from anyone. You just go to one of the exchanges. Similar with crypto, you just go to one of the exchanges like ByBit, and you have what's called a perpetual swap. Perpetual swap is a futures contract with no time limit, no expiry. You could also use futures with a time limit. I won't go into that. The easiest are the futures, because you don't have to think about a particular date. Futures with a particular time expiry will behave differently towards the end of the date. So I won't go into details here. The easiest is just using perps. So basically it works the same. Using shorting means that you will invest into the reversed Bitcoin somehow, and you will profit when the price will fall down. So when you expect there will be a movement of Ethereum or Bitcoin going down, because for example it was pumped and then you expect to go lower, then you could think about shorting. This is one of the examples of a position where you will profit when the price will move down. So let's get into it and see that how it works really on examples. So if you go to trade now on ByBit, you will see this particular thing here in derivatives. You have USDT perpetuals. You can use also USDC perpetual. The only difference is that whether you want to be denominated in USDT or USDC for buying the shorts. It really doesn't matter. For now, the bigger market is on USDT, so I will go with USDT as well. And then what you have here on the right is that you have the order book as with normal trading, and then you can think about having a leverage, and you can choose between cross and isolated. Cross is having all the positions going under the same account, meaning that if you got liquidated on one position, you actually get liquidated on all of them. Isolated is that each bet is isolated and won't influence the others. Depends on your strategy, because for example with shorts you can do those kind of things where you short one coin and you long another one, because you will think that the difference, for example, they will move in separate directions much faster. So for example, you want to long Ethereum, short Solana. This is like very common scenario, or the other way around depending on the market. Or you, for example, want to short a portfolio of altcoins but then long Bitcoin, so that you are a little bit hedging your risk here with Bitcoin. So this is the more of the easier strategies here when you want to have a cross portfolio of different shorts at the same time. But here we're going to talk about the easiest scenario where you actually just short one particular token, Bitcoin in this case. I will go with Bitcoin. What you can do is basically, as with spot buying, you can do limit or market. Buying limit is basically entering for the particular price. Again, you can see how the order book behaves. Market is of course just getting the things from the market, and then again you can choose how much you want to get into. I will go with 10% of my portfolio here because there's a considerable leverage, 10x. I wouldn't recommend it to be that high. Well, depending on the scenario, of course, and depending how you want to approach it. I usually don't go with more than 5x, which is still a lot in most of the cases. So I just changed the leverage to 5x, both for longing and for shorting. So again, the difference between longing and just buying on spot is that you still can get liquidated on the long, right? Because even though the price can go up and then I will profit 5x's, if it goes down by 20%, and I have no margin for that, then basically I get liquidated entirely from my position, and that's it. So I'm going to open the short here just to show you how it behaves. So 10% of what's available to me. The total order will be $57, 57 USDT. The order value is 287 because of the 5x leverage. So I'm paying 57 for that position. But the total exposure is $287 because that's a 5x leverage. I confirmed that, and as you can see, this was pretty quickly filled, and I have my position down below. So as you can see, you can see the cross here being 0.94x. 0.94x means the actual leverage on the whole account. So I think I have something like $300 on this account. You can see that here, $300. And available balance is 246 because this 57 I spent on this on this short. So what I just told you is I could add more positions to more shorts to this portfolio, to this wallet. So for example, let's go also with shorting ETH. It works pretty much similar. So again, this is USDT denominated. I want it to be the same because I wanted to come into the same position here. I have the ETH chart here, and let's open a short also for 10% of the remaining account here. I'm opening a short. Again, the order cost will be $22, order value 113 because of the leverage being 5x, confirming that, and that's it. I have another short here. So right now you can see that the Bitcoin leverage actually increased. It was 0.9. It's still like over 1 right now, and it's because I got the short on ETH as well. So this is really what's happening here. Also, you can see some interesting things. So for example, liquidation price, this is what you have to look at is when you get liquidated. So this means your portfolio will go to 0, and this is when Bitcoin will, for example, rise to $33,000, or Ethereum will rise to close to $4,000. I get liquidated on that position. Again, this is the cross. I can also go with isolated and put a particular position, very similar to that one. But when it comes to shorting, that's the easiest thing. So if I want to close it, I could either go with limit and then choose a particular price I want to close it by, or I just want to get the best offer available on the market right now and can take anything and just click on market. It shows me how much I want to liquidate, whether I want to liquidate the whole position, close the whole position, or just a part of it. I click on 100%, confirm, and that's it. The same for Bitcoin. Going to liquidate, close it as well. And that's it for ByBit. It's really simple, but remember, be responsible because it's really easy to lose money. It's like the difference with spot is that with spot you can always have something because in the end you have those tokens and you won't go below 0. Here you can really lose much more than you invested, especially that you have the cross margin. Of course, you want to lose more than is your total balance, but still going to 0 is not fun. So that's one thing. Let's go to GMX just to mention that because you can also trade. This is on Arbitrum, one of the biggest decentralized exchanges, and similarly you can do shorting on GMX as well. You have the chart here, and basically you have the long, short, or swapping. Swapping is just buying on spot, you can swap whatever. Here you will short with Ethereum itself, so actually you pay in Ethereum to short Ethereum, and you will also make profit in Ethereum. Apart from that, everything is similar, so you basically put like whatever you want to short. You put the leverage that you want to put in, and just click on short ETH to get it going. And that's basically it for GMX. So thinking about it, this is how you short. Shorting is easy, but it's hard to make money on. It's much easier to actually buy on spot and wait. However, I wanted to cover that because shorting is also part of trading crypto and thinking about when markets are falling. This is the way to make money as well. However, be responsible, and remember, none of that is financial advice. It's purely educational. I wouldn't recommend, especially for beginners, to go into shorting. Super risky. You can lose a lot of money. So don't do it, but it's worth learning about. Thank you for watching. Subscribe to the channel for more crypto news, crypto updates, and see you in the next video.